Hello everybody, we are Group 10. Our group has 5 members. Today we will present the financial reporting and analysis on Vietinbank. This presentation shows our further study into stock markets as well as analysis of performance of the top bank in Vietnam. It's Vietinbank. We apply the model and methods to carry out the final analysis of the firms and give recommendation to investors in the near future. So this contains a presentation, have 8 parts. The first one is basic information, investment summary, business description, management and governance, industrial review, and the competitive positioning. The next one is valuation, financial analysis, and the last one is investment risk. Okay, we move to the first part is Vietinbank information. As you can see here, we have the registered name is Vietnam Joint Stock Commercial Bank for Industry and Trade. Also, we have the capital, equity, stock code, and the current stock price. So, here is the Vietcombank vision, mission, and core values. About the vision, Vietcombank is becoming a leading financial and banking cooperation in Vietnam. And the mission is being the number one of the Vietnamese banking system. And the last one is the core values are targets customer and towards perfection and honesty, integrity, transparency, professional ethics, and the protection and development of brands. Also sustainable development and responsibility and respect. And the last one is dynamics, creative, professional, and modern. Here is the business philosophy. We move to the investment summary. We initiate coverage of Vietinbank for industrial and trade with a long-term hold recommendation based on the following. Firstly, banking stocks have strongly outperformed the market. During the first 2 months of 2019, bank stocks have outperformed the Vietnam index thanks to the expectation of higher credit growth, improving asset quality, and an M&A boom. CTG has been the second best performer with an almost 40% increase in the share price. Secondly, the CTG is currently ranked first in terms of net worth, total assets, and the net income among listed banks with profitability slightly above average. Thirdly, the CTG has a strong capital base with the percent of the IFC and the BTMU as strategic shareholder. The state also signals to further reduce stake in the CTG. And the CTG is consistently maintained the low NPL ratio. However, its current approach to the loans classification is not as strict compared to its peer, the VCB, Vietcombank, and the BID. The CTG 2019 earning growth will likely be modest due to the slight lower NIM and high provision expense. The cost-income ratio, the CIR, is controlled at the 35.4%, much lower than the 2018. Vietinbank constantly improved the quality of risk management and internal control process, ensuring safety and efficiency in business activities. From 2016 to 2019, Vietinbank has grown steadily. Total assets grew at the CAGR of 7.46%, while its capital structure remains stable with liability access around 94%. Customer deposits grew at the CAGR of 8% from 2016 to 2019, which were in line with credit growth. At the same time, Customer deposit account for a small increase in proportion of liability from 74% to 76%. Interbank borrowing interbank borrowing and valuable paper came next in line and made up 9.3% and 5% in total liability in 2014. Vietinbank has been a net lender with LDR above 101% since 2016. About the business description. So you can see here, we have the establishment, business network, current data, and 2019 performance. Up to 2019, Vietinbank has 3 important points within the milestone of Vietinbank. One is in the 1988, second is 2000, and the last is in the 2008. We move to the next part is management and governance. We also have 3 small things here. The first is organization and human resources. Include the board of directors, supervisory board, and executive board. Also, the strategic orientation for development of middle and long term, and the sustainable development objective. The industry overview is also an important part in this presentation. So we have banking industry outlook. About the 2018 overview, 2018 was a bright year for the banking sector when the profitability of most banks expanded strongly. With the year 2019 outlook, as you can see here, we also have 3 important points we need to talk about. The first is the prudent credit growth in 2019. The SBV's credit growth target for 2019 is set at 14%, the same level as in 2018. The prudent credit growth of around 14% is suitable to sustain the development and stability of the overall economy, as well as the health of financial sector. The second is enhance the resilience of the Vietnam banking system. The SBV announced that Vietnam banking system resolved an estimate Vietnam dong of non-performing loans by the end of January 2019, or over 40% of total bad debt classified under resolution, which aim to improve the stability of Vietnamese financial system. The last is increasing funding costs in 2019. Vietnamese bank should continue to enjoy high NIMs, driven by retail loans. Vietinbank business has 6 activities in total. First is making loans to organization and individual based on the nature and capability of the bank's source of funds. Second is mobilizing and taking deposits from organization and individuals. Thirdly is international trade finance service, discounting and commercial paper, bonds, and other value notes. 4 is performing payment service among organizations and individuals. 5 is carrying out foreign exchange transaction. And the last is providing other banking service permitted by the State Bank of Vietnam. With the Vietinbank market position, Vietinbank currently has a widespread network of 155 local branches in 63 cities and provinces across the country. In addition to this intensive network, Vietinbank has established relationships with over 1,000 correspondent banks of more than 90 countries and territories worldwide. With 100% shareholder divided into 64.46% of the SPV, the 25.12% of the foreign strategic institutional investor, and the large part is 10.42% is the public investor. With valuation, we use a combination of WACC, the residual income, the PE and the BP methods to value CTG's shares. We arrive at a WACC for 12.24% for the CTG. A more detailed breakdown of our WACC assumption is present in the table below. The residual income method suggests a fair price of 30,991 Vietnam dong per share for CTG stock and incorporate of the following inputs. The table below shows the calculation of CTG's estimated price beyond the 5-year forecast cash flows. This is the market-based valuation. Here we need to pay attention. The BCB, PE, and BP are excluded in the period's average calculation as this value currently seems to the outlier. Applying a justified PE of 8.4 and justified PB of 1.1, we project CTG fair value to be 20,941 Vietnam dong and 21,953 Vietnam dong respectively. The absolute PE valuation model determines the value of a stock based on 5 key factors. The first is profit growth rate, the dividend rate, business risk, financial risk, and the ability to estimate profit. Based on the business result and the EPS, there are 3 cases for CTGs with growth rate of 4% is the worst case, 10% expected case, and 16% the best case. From here, the basic PE can be calculated from 11.6 to 19.4, then adjust PE according to business risk, financial risk, and profit estimate. Taking this valuation approach above into consideration, we consider the fair price of the CTG shares to be 25,366 Vietnam dong. Combined with the 1 year's total expected return for the CTGs is 12.22% and the range of CTG's value. Therefore, at the time of the issuing this report, we could recommend to hold the CTG shares. So this is the most important part in this presentation, the financial analysis. We have the balance sheet here. From 2016 to 2019, Vietinbank has grown steadily. Total assets grew at the CAGR for 7.46%, while its capital structure remains stable with liability assets around 94%. Vietinbank asset structure has stayed quite stable from 2016 to 2019, in line with the industry average. Customer loan made up to 70% of total assets on average, with the other major component was interbanking lending, which count for 9% on average. With credit activities, the customer loans have been growing much more steadily in recent years, in line with the industry. The credit growth in 2018 to 2019 was much lower, with the CAGR of 8.9% during this 2016 to 2019. With the mobilizing activities, customer deposit grew at the CAGR of 8% from 2016 to 2019, which was in line with credit growth. At the same time, customer deposits account for a small increase in proportion of liability from 74% to 76% in 2016 in 2019 respectively. Interbank borrowing and valuable paper came next in line and made up 9.3% and 5% in total liability in 2014. Vietinbank has been a net lender with LDR above 101% since 2016. With the capital adequacy, Vietinbank's share in 2019 due to the circular 36 per 2014 is 9.25%. According to the Basel II Accord, CR need to reach 8% at the minimum. If Vietinbank complete raising capital by paying stock dividends, CR will reach 8.24%. With the asset quality, as you can see in the table below, the Vietinbank NPL ratio has consistently been among the lowest. Vietinbank report an NPL ratio of some 1.4% in late September 2018, and even adding in special mention loans only brings up to a ratio 1.7%. Other major local banks report similarly low problem loan ratio, with Fitch rating also understate there's true asset quality issues. Fitch believe with the true problem loans ratio is asleep 3%, but it could be much higher. It also estimates the profits could absorb an increase in its NPL ratio to around 5% by the end of 2019. Assume the bank provision for 70% of the newly recognized NPLs. Beyond that, the banks would likely to make a loss in 2019, and its capital ratio would be put under further pressure. Fitch rating predicts. Alternatively, the bank could shall recognize problem loans to the Vietnam Asset Management Company, for short is VAMC, which may allow the bank to avoid short-term lumpy provisioning costs. And most stringent NPL recognition could add to its capital needs. Vietinbank is already pushed up against Vietnam 30% foreign ownership limit for bank. Fitch rating notes, adding that this will hamper its ability to raise common equity, which is viewed as the best form of loss absorbing capital unless the limit is relaxed. The plan could also be contingent on the government's stand on its system-wide credit growth target, which is 14% for 2019. Fitch rating how the bank's loan growth is likely to be lower than this, as management focus on the balance sheet cleanup and Basel II implementation. The cost-income ratio, the CIR, is controlled at 35.4%, much lower than in 2018. Vietinbank constantly improved the quality of risk management and internal control process, ensuring safety and efficiency in business activities. In the profitability, in 2018 seems to be a bad year for TTGs, with many key financial ratios going bad but soon turned around in 2019. In 2019, Vietinbank achieved a profit of nearly 11,500 billion Vietnam dong, up to 26 compared to the plan and up to 83 compared to the 2018. The reason is that the NIM improved thanks to the retail segment and non-interest income. In 2019, we were strongly at 28% compared to the 2018. The Vietinbank ROE and NIM are among the lowest in the industry. as many of its assets are unproductive recently. Although we expect these ratios to improve in the following period, it is still a minus point for the CTGs at the moment. Recently, the State Bank issued Circular 22 providing a ceiling on a loan-to-deposit ratio (the LDR) of 85% for all banks from 2020 onward. We assess that these regulations will negatively affect Vietinbank the NIM growth prospect in the context of its current LDR ratio of 89%. So as you can see here, we have 6 key points. The first is negative cash flow sudden higher provision for credit loss during 2019. The CIR has been strongly improved along with higher LLR compared to the industry. The third is CTGs is undervalued compared to its peers, considering the PB is equal to 1.05. Next, most financial indicators are improved compared to the 2018. The low and IM net interest margin compared to its peers. And the last is ROE equal to 8.2% is among the lowest of the industry. The problem of being unable to raise more capital will eventually affect credit growth as well as the profit growth. We will have to wait for the restructurings in the next 2 years to judge. So this is the last part of this presentation, the investment risk. The first risk is market risk. As you can see here, there is 4 points about the market risk we need to talk about. So therefore, what's to do? What's to solve this problem? The Vietinbank needs to focus on the market's risk management, need to improve its policy, develop organizational structures to make better systems and tools, ensure risk control and safe and effective business. With credit risks, the financial health and competitiveness of the enterprise are limited, especially for small and medium enterprise. In face of the challenge, Vietinbank will continue to focus the credit risk management through the structure of credit portfolio and the evaluation, screening, and supervision of customer. The SBV requires Vietinbank to continue consolidate its calculation data of risk-weighted asset and orient structure of credit portfolio, ensuring business performance optimization on the basis of cost reduction and effective use of capital. The last is export activity and FDI inflows may be impeded in the context of political instability of the global economy and the tendency to protect domestic production of some developed countries. The last risk is operational risk, divided into two small parts: external fraud, robbery, and the legal violation in the monetary of banking and banking sector. Above is our presentation for today. So thank you for listening and watching.